Hello and welcome to Diaspora Careers and Investments. In this video, I'll be sharing with you, how to buy funds on the Vanguard platform. Vanguard is one of my preferred platforms for buying funds because of their low charges, and also they have been around for over 40 years, and they manage a portfolio of about $6.3 trillion. So it's quite credible. And for those in the UK, their prices are in pounds sterling, so you don't have to pay for any forex, unlike some of those which are based in the US, and so you have to pay for the exchange rate. So Vanguard is generally a good platform, and I tend to use it as well. So you can read more about them on their home or why Vanguard. But first, let's go to how to identify or find the funds to invest in. So when you go to what they offer, you can either see the full list of funds available, or Vanguard also has what they call the life strategy funds and then the target retirement funds, which are an already made portfolio. So you don't get to you don't even decide what funds to invest in. They do everything for you, and I'll show you an example in a bit. So it's good for people who don't really know what funds to invest in. You just want to put your money somewhere and then get some returns later on. So that can be good as well. They also have the index and active funds and then the ETFs, which are quite similar. And that is what exactly I want to point you to today. Before you even get here, you would have to open an account with them. So remember to open the stocks and shares ISA account option, because of the tax benefits that comes with it. So you can do that over here, but I've already done that, so there's no point going there. So we go to the index and active funds because I know what I'm looking for. Um, yeah. So when you click on the index and active funds, okay, so they are even showing us some of the life strategy of funds. So you see that this is a life strategy fund which is made up of 20% equity. So that is 20% shares, and the rest are bonds. Um, this is generally, a low risk. So the risk levels is from level 1 to level 7. Of course, level 7 is more riskier than level 1, and you can also filter it based on the region. But at 20% shares is generally a low risk, so it's 3 out of 7, and 80% is in bonds. Bonds is generally cash, which is, you give your money and then the government borrows that for their businesses and then they pay you very little. I generally don't tend to invest in this kind of thing because bonds really don't pay that well. So I prefer to invest in funds, which is 100% stocks and shares. Of course, it's more riskier, but I prefer that to than bonds. So yeah. Um, so there's also the life strategy 40% equity fund, which is 40% shares and then 60% bonds. I still I'm not really up for this also because 60% of the money is in cash, which is given to government to use for their business, and they pay you something at the end. You can actually have a look at it. So there's a 60% equity fund, 80%, and the higher you go, the risk level is also increasing from 3 to 4. It's still 4 here. It's still 4 here. Um, you can actually check out, how so full fund details will show you how well it's been doing. So you can see that there's an ongoing charge of 0.22%, which is a bit high, I think. Um, but you see that if you had invested £10,000 in 2011, by 2022, which is about 10 years afterwards, you would have gained about £6,000 more, um, which is not so bad, but it's still not great compared to other funds. So yeah, they have a share class of about 2.1 billion. So that is quite credible. It shows that there's quite a lot of investment in there. So that can also give some credibility to it. So that can be good. You can choose to go for the if you want to invest in this life strategy option, you could select the gross accumulation option, whereby the dividends, which is the profit based on the companies they invest in, is reinvested for you, or you could choose to take the dividends as income. So that is good. Remember, if you select the stocks and shares ISA option, you wouldn't pay any taxes on the dividends. But if you don't, then because it's an income, you would have to pay tax on the income you make on that. So that is that. Let's go back to see. So yeah, there are options where you can go for 100% equity option, which is what I would tend to go for, because I like to take a bit of risk, in the stock market. So you can see that that is 5 out of 7. But let us actually show more specific ones. So let's go to a market based in the US, like the S&P 500. Yes. So the S&P 500, let's see the detail. Is usually it's based on the top 500 companies in America. So you can see that the number of assets is about 508, which is nearly 500. So you can read the full fund details here. So we see that it is based in the US. It's selling for about 64 pounds, or about 65 pounds per share. Contains about 508 stocks based on about 508 companies. This is the ongoing charge, and it's a risk of about 5 out of 7. So it's a bit risky, but yeah, it's manageable, I think. It has a total asset of about $32.1 billion. So that's a lot of investments. So this also gives it a bit of credibility that a lot of people have invested in there. Now let us see how it's performed. So in 2012, if you had $10,000 invested, it would be worth about $40,000. So yeah, in the last 10 years, you would have gained about $30,000 more. So that is a good one, I think. Of course, this is based on past performance, and they will tell you that past performance is not a reliable indicator of future results. So it's a risk you are taking. And hey, I'm not a financial advisor, but yeah, the numbers speak for itself. Um, Remember that it's rising and falling, but in the last 10 years, it seems to be rising overall. Remember, if you had invested your money somewhere in January 2020 and you wanted it out by March, in the next 2 months, you would have lost, because if you are $28,000 here, it was selling for 22,000, so that would have been a loss. But if you had waited a lot longer, it would have risen again and would have gained something in it. So generally, the rule of thumb for the stock market, or even for these type of funds, is that you should keep the money for up to about 5 years or even more, because you see that the longer you keep it, it tends to do well over the long term. We can of course see the price and performance in the last. So you can see that if you had invested it in the last 1 month, it was selling for about $80 on 7th March, and today it's selling for about $84. So that's not extremely bad. But remember, if you are selling it, the Vanguard will also take some charges. So you must make sure that the numbers add up to the point that if you sell and then even after their charges, you make some profit. So generally, if you kept it for maybe 12 months, for a year, it also wasn't doing so bad. It was selling for about $77 per share in April, and today it's selling for about 84. So that's also not so bad, but the longer you keep it. So generally, the rule of thumb remains that if you want to go into the passive investing in the stock market, then you should be looking at about 5 years or more, or else you may want to buy bonds, which you don't lose money, but you don't make a lot of profits either. So that is that for S&P 500. So if you wanted to invest in this, of course, then you click on the invest now, and then you go on to buy it. Let's go back to good. So what are the other ones you can invest in? So let's go back to the US market. Um, So there is also the oh, the UK. So there is also the so there's the S&P 500, which is the top 500 companies in America. You can see that, and there's an ongoing charge of 0.07%. You could also do the US Equity Index Fund, which is essentially all the companies listed on the US stock market. So that's about 4,000 companies, and you can also click here to see how it's performed in the past. So you can see that if you had invested £10,000 in 2009, today it will be worth about $73,000, which is quite good. But remember again, past performance is not a reliable indicator of future results. So you don't say that, oh, it did well, so you're going to put all your money in there. It could actually dip and you could lose some money there. But generally, if you are in for the long term, then it looks like it could pay. So you could also look at the price and performance. And again, you could select the accumulation option, whereby it reinvests the profits from the companies into the fund for you, or you could select whereby you take out your income. Remember, if you want to take out your income, use the stocks and shares ISA option for the account. If not, you pay tax on the profits that you make. Let's go back again. And you can see that this also got about 8.8 billion invested. So that is quite a good one as well. So that shows how much money people have invested in there. So you could also invest your money in there, and you'll be, fairly safe. Um, there are other ones like, yes. So this is not stocks and shares; it's bond, which is, the U.S. government essentially taking the money and then using it and then paying you some profits. So let's see how that is performed, which is the U.S. Bond Index Fund. Like I said, I generally don't tend to invest in bonds because they don't pay that great. Um, so you can see that in 2013, if you had invested $10,000 or £10,000, today it would be worth 10,916. I think this is not great. It's not too good, I would say. But of course, it's less risky. So the risk level is 3 out of 7, which is less risky, honestly, because it's even in green. 3 is quite good. But it means that if you put £10,000 in the last 10 years, you wouldn't have given gain up to £1,000. If does it account for inflation? Even if after accounting for inflation, you may probably be losing money. Because what you could buy with $10,000 in 2013, I don't think you can buy with $10,916, £10,916 today. So bonds are really not that great, but this is a bond market, so yeah. So yeah, I guess this helps you to select which fund to invest in. You could also invest in the UK. So let's see what is available from the UK. So there is the FTSE 100 Index Unit Trust. So the FTSE 100 is the top 100 companies in the UK. So it's a UK based one, and the risk is about 5 out of 7. So a bit risky like the S&P 500, but it's still a good one, I would say. It has about 102 companies. Um, there's also the FTSE 250 ETF, which is about 250 companies in the UK. So that's also something you can invest in. And with all of this, definitely do click on the full fund details to see, even if you want to see the list of the companies, you can download the key investor information. So let's click on there. Yes, so you can actually click on there to see, the full list of the companies and how they charge, so that can be good as well. Let's go back to what we're doing. So the FTSE 100 index fund is also, the top 100 companies in the UK. They've got an investment of about 682 million pounds. Not as big as the S&P 500, which was in the billions, but it also shows that they've got a good amount of money in here. So your money is relatively safer. Let's see how it's performed. If you had £10,000 in 2016, today it's worth about 13,000. So you already see that the performance is not as great as the S&P 500, But it's also not done as bad as the bond. So you decide which one to invest in, and you can read a lot more on that. Remember, here on Vanguard is all funds. Vanguard doesn't have, if you want to buy an Apple stock or an Apple share, uh, you cannot buy it on Vanguard because Vanguard is for only funds. They don't have individual companies. I'll do a video that shows for individual companies as well. So let's go back. We are still in the UK market. So if you wanted to invest, so there's the FTSE 250, which is the top 250 companies here in the UK. Yeah, so there are a few ones. So there's the bond market, and as we would have seen earlier on, the bond market doesn't really pay that great. So yeah, there's actually one which is UK inflation linked gilt index fund. So that is inflation adjustable. So that can be better. Um, let's see something based on. You can go for something which is also global, based on the whole world or Asia Pacific. Let's see Europe. If you want to invest in Europe, so you can invest in the Euro Investment Grade Bond Index, which is a bond, or you could do the. I'm looking for a particular one. Yes, so there's a FTSE Developed Europe. So this is based on about 500 companies in Europe or in the developed world, in developed Europe, excluding the UK. So this means excluding the UK. And let's see how it's performed as well. So this is also based on stocks and shares. And we can see that if you had £10,000 invested in 2009, today you are looking at about 31,000. So that is not so bad, I would say. And it's got about 2.4 billion invested. So that is also a good one. Their ongoing charges is about 0.12%. So that is also manageable. And you can choose to invest the whole amount plus the dividends, or you want to take out the dividends option. And you can click invest now and it will be invested for you. So this is actually one of the good ones I invest in as well. Um, you could also choose to invest in Germany, in the German market, which is about 165 companies, and it's the risk level is a bit higher. But if you look at how it's performed, then you can decide whether to invest in here or not. The S&P is showing again, but it's based in the US. Um, there's the FTSE Developed Europe. So this is all Europe, including the UK. So this includes the UK, but the FTSE Developed Europe excluding UK. Remember, you can click on the full fund details to read on the what the funds involve, their ongoing charges, and all of that. Let me show you something from emerging markets. So emerging markets can include Africa and all of that, and that tends to be a bit more riskier. So based on whatever works for you, you could go for that. Um, so I hope this video actually helps you to see, how you could buy funds or how you could invest in the stock markets by buying funds. For those in the UK, Vanguard is actually a good one because apart from the low charges, also the the amount is in pounds, so you don't pay anything based on forex changes. So that can be good. I hope you found this helpful, and if you have any questions, please feel free to use the comment section to let me know. If you want to know specifically the ones I invest in, I'll have a whole video on that alone. There are several markets you can invest in, as you can see, or even the global markets. Thank you.